focus on supply chains and more. Joining us from TCW, Eli Horton is the Senior Portfolio Manager joining us from the New York Stock Exchange. Eli, thanks for being here this afternoon. Tell us about your guys' Transform ETFs, because a couple here seem like they kind of fit some of the themes we've been talking about.
Oliver, good to be with you. So at TCW, we've got a suite of active ETFs. We are investing behind very large systems changes. We call these mega themes, where there's large economic change. And we think these are some of the defining investment opportunities over the next decade. Importantly, investors are very underexposed to some of these themes. Themes like the energy transformation, the supply chain transformation, bringing manufacturing back to North America. Many investors, the core of their portfolios are more growth-oriented and TMT-oriented, and we think that this really fills a sweet spot for them. We're active, bottoms-up investors. We invest in a concentrated portfolio, think 20 to 30 stocks, high conviction in some of these mega themes. Tailwinds at our back, which we love to invest with.
Speaking of supply chains, we talked this morning with the CEO of a company called Logistic Properties of the Americas. He was right where you are now after ringing the bell at the New York Stock Exchange, a Latin American-focused reshoring real estate investor, and their stock's going nuts. I mean, like, what is it right now about how these fit into the investing world? Is it just like people are trying to land grab, a like literal land grab of things coming back post-COVID?
Well, I wouldn't only tie it into COVID, but I would say that we really are at the very beginning of a seismic shift. To understand where we're going, it helps to understand where we're coming from. And for the better part of the 1900s, the world built manufacturing in Asia, primarily China, as it was obviously cheaper to do so. We've seen that system show its fragility and a number of cracks over the past handful of years. It started with the trade wars and the tariffs, back in 2018 or so. The pandemic completely flipped the supply chain on its head, and the list goes on and on. We even had a boat get stuck in the Suez Canal, and no one could get diapers at Walmart. What are companies doing? They're bringing their manufacturing back here to North America. We've seen, just since 2021, $1.2 trillion of new manufacturing announced right here on home soil. That's 3 or 4 times the level we would typically expect. And it's because management teams and boards are saying that this is an economic imperative for the competitiveness of their business. So companies in the logistics industry, companies in building materials are seeing these huge tailwinds. And I think it's very early innings. This is going to take place over decades, and being early is exciting as an investor.
SUPP that we're looking at on the supply chain side, which has been beating the S&P over the last year, is predominantly U.S. based. Martin Marietta is a top holding there, but there's a few Canadian companies in there. How often do you have to refresh this? I mean, does this industry change rapidly where you got to be on a month to month or quarter to quarter?
Look, we're long-term investors. We have 20 to 30 stocks in the portfolio. We believe in concentration, and we believe in our bottoms-up process. So myself and our team of analysts are constantly turning over new stones, looking for the best ideas to express in the portfolio. Now, when new facts emerge, when information changes, we will make changes. And I think that's really a huge advantage for us when you think about how much change is taking place in this manufacturing and supply chain system. We're able to be nimble and respond to those changes in ways that passive funds cannot.
You've got a couple of big winners in there with NVIDIA, Taiwan Semi, Lam Research. I mean, there's some tech that finds its way into the top 10. So you're benefiting from that as well. What role are they playing in the supply chain revamp, the semis?
Yeah, look, no, they play a key role. In fairness, 2/3 of the portfolio is industrial businesses, and I think it's fair to think of us generally as this kind of older economy set of companies in the portfolio. But semiconductors are critical to the build out of new manufacturing. Think about TSMC's $40 billion fab in Arizona. Think about any factory that's being built in the US. It is more automated than the factories of the past. The amount of robotics, sensors, electronics that really relies on the semiconductor industry.
Okay, fair enough. Seems like the big winner that you guys have kind of cracked the code on, though, is NETZ, NETZ. I mean, big past year for this thing, up 45%. So we'll dive into that one in some detail next time. We got to jump. Eli, thank you very much for the explanation. Appreciate you being here this afternoon.